Let's look at it from the United States perspective, from the U.S. point of view, especially for farmers. China is the world's biggest importer of soybeans, but 80%, it's cut 80% of its soybeans imports from the United States. And analysts have been saying that this has cost the U.S. industry something like $2 billion. We have a report on this. Our White House correspondent, Nathan King, he recently traveled to soybean country in Illinois, and he heard of the impact that this trade war is having on one farmer. Let's watch this.
On this farm in German Valley, Illinois, the soybean harvest is good this year.
It's a good, healthy stem.
But Ralph Kaufman isn't worried about his crop. It's the cratering market for these tiny beans that's on his mind.
Now with the tariff, the demand has been cut, so there's just way too many soybeans. It's just not a good situation for soybeans right now.
We loaded in the rain the other
At age 77, Kaufman is a savvy, sixth-generation farmer, turning a 400-acre inheritance into 3,500. But it didn't come easy. Every night, after a hard day in the field, Kaufman studies the latest soybean prices, weighing his options. Sell, store, or scrap soybeans altogether.
We might give up on soybeans, yeah. If we don't see a marketed improvement in the price. If we got some other countries that come in and to replace China, that would help the market and move some of these beans out. But there's just too many soybeans.
For next year, Kaufman and his farm will rely more heavily on their other main crop, corn. Kaufman has been around long enough to know that other producers from Brazil and elsewhere are starting to replace U.S. soybean growers as the tariff war continues. He fears the China market may never come back. Kaufman will decide what to plant next in January. But for now, it's all about getting through this harvest and a harsh winter, hoping for a thaw in trade relations between Washington and Beijing. Nathan King, CGTN.
So, Merrill, we hear of the impact that this trade war is having on at least one farmer in the Midwest. And in many respects, we hear very often that the farmers in the United States, that's Trump's constituency. Is there recognition? Is the administration aware of what this is doing?
Yes, it is. And just a couple of points about that. Number one, 90% of the U.S. soybean crop is genetically modified organisms, GMO, and there are countries, even though they're trying to find other countries to buy it, there are countries who don't want it because of the GMO point. So some of them are moving to feed corn, and President Trump has tried to help them in two ways. Number one, he's handing $12 billion out to the farmers to help offset those losses. And number two, he's increased the amount of corn that can be put in, ethanol that can be put into the gasoline as a way to try to create a bigger market for the corn so they can shift to feed corn and use that in our gasoline. So he's trying to compensate for it, but these are bad approaches. You need to be able to get back to have a trading organization where they can find markets that want to buy the products.
Just one point, Merrill, and that is the money that's been handed out by the U.S. government to these farmers to compensate for their losses. I mean, how long can that continue?
Well, it won't last very long right now. So my guess is he's got a pool of money he can access for that. If this situation doesn't get resolved soon, I suspect we'll hear him looking for another 12, 15, or $20 billion to hand out to try to offset some of those losses.
Arthur, the United States is set to roll out more tariffs in December. There are talks taking place, trade talks right now. But if those talks fail, will we see more tariffs? Are we seeing some kind of brinkmanship here? You know, this is a negotiating tactic.
Yeah, I think it's partly a negotiating tactic that Trump wants to show that he's going to put some muscle behind this trade debate. But I think if the 25% anticipated tariffs go into effect in January, as anticipated, American consumers are most certainly going to feel the effects of that. We're going to see increasing prices for a wide variety of products that American consumers have been accustomed to buying at moderate prices.
Do you think there might be a softening in the American position after the election?
I think there could be, but based on what we've seen, in the past over the past year, I wouldn't anticipate a great breakthrough to occur right away.
And just to add to that,
yeah,
it's not just the American economy. The Chinese economy is going to be hurt by this as Americans stop buying Chinese products because of the tariffs. So it's going to affect both economies significantly.
Afshin, the president's just got a new deal. NAFTA's going to be replaced. He's got a new deal with the Canadians and the Mexicans. So there is a bit of momentum there, isn't he? Does he think he could carry this momentum into talks with China, or are there very different issues there?
You know, there are different issues, partly because of what I mentioned earlier. The sense I get is he just views China differently. He genuinely views China, and as does Bob Lighthizer, the trade representative, as a predatory state that, and he doesn't see, they view these fourth industrial revolution industries in China, such as artificial intelligence and nanotechnologies. They don't want them to dominate those industries. So in a sense, they're trying to knock China down a notch here. This is not only about trade here. So they're trying to knock China down a notch. And so I just feel fundamentally, you mentioned, Anand, the Republican Party being the party of business. I guess the big difference between President Trump and the previous two Republican presidents is both were the parties of business, but President Trump mistrusts globalization. The previous two Republican presidents understood that globalization can actually be very good for the American economy and embraced it. Yeah.
Chen Chenchen, as Afshin just pointed out, this has got to do with not just trade. There's a little more to it. As he put it, the United States is trying to bring China down a notch or two. What is the Chinese strategy for this?
Well, I think if you look at the various talks by the Chinese top leaders and also the wider discussion among the Chinese Republic, I think both the government and the Republic has been already prepared that this is going to be a protracted dispute. And it's going to last very long because it's about the rivalry and competition between two big powers. If you look at economic history, there has never been such a situation in which, while there is already an existing major power and another emerging power can rise peacefully. So now we are facing this new historical fact. We are not sure where this is going, but I think psychologically we're prepared, and the Chinese government are also making efforts technically to prevent this trade issue to spill over into more fields such as the finance and also the exchange rates and also the real estate industries. So I think we are taking pragmatic measures, Anand.
Right, and Chen, I want to ask you about one other development in China, and that is President Xi Jinping has said that he will be attending the China International Import Expo next week. Now, it's a huge event. 2,800 companies from G20 countries will be at this event. What is that signal from China about?
Yeah, for the most time of the next week, China is going to have this big event. I think many people find this quite dramatic, that while the United States, which used to talk a lot about the trade liberty, freedom of trade, now China is upholding this flag of freedom of trade, while the United States is pursuing about the protectionism. I think the very strong signal China is giving is that among countries, especially along countries along the Belt and Road, that we are promoting this very strong sense that the liberty in trade or freedom of trade is still the only way out. If you are truly talking about seeking the next round of driving force for growth, if you are truly talking about rising peacefully, and if you are truly talking about maintaining an environment that would facilitate our development. So I think that's the very strong signal that China is giving.
Actually, a big international event later this month, that is the G20 in Argentina. Both President Xi Jinping and President Trump will be there. There are very strong indications that they will have a face-to-face meeting. What do you expect to come out of that?
You know, I expect if President Xi were to make a dramatic gesture, I think we could, potentially see a slowdown in this, escalating tariffs.
What would that be?
I think a dramatic gesture would be, much more significant promises of imports, much more significant lowering of tariff barriers in China, and assurances on intellectual property and technology transfer, some kind of assurances that the Trump administration would accept. I think we could see that. But again, I go back to my original point. President Trump and the advisors that he seems to listen to most on trade remain very suspicious and wary of China and their intentions.
Right.
And it's going to take a lot more than one meeting to change that.
Merrill, what do you expect to come out of the G20?
I really don't know. Last month, I suggested on the program that President Xi should do what Jean-Claude Juncker, the European Union, did, which was propose zero tariffs. That doesn't address the tech transfer, but it would certainly be a good start. But I think the point is also right. The comment was made on the tape that the U.S. and China are competitors, not adversaries. In the White House, they see it a bit more adversarial than just competitors.
Arthur, one other development, that is there's a report in the Washington Post which tells us that there are now fewer Chinese business executives, tourists, and students visiting the United States. In fact, the State Department says there's a significant drop in the number of applications for visas. What does that mean?
Well, certainly it's going to have an impact in terms of the service surplus that the United States is running with China. If there's any sort of bright spot in the bilateral trade relations,
you never hear about that,
yeah,
right?
that we never hear about, it is the trade and services, and certainly educational services and tourism services are two of the primary, drivers of that surplus. And again, seeing thousands or hundreds of thousands less Chinese tourists and Chinese students enter the United States for various purposes is certainly not a good sign for the United States and for the robustness of our economy.
Chen Chenchen, why do you think there are fewer Chinese now coming to the United States?
Well, I think, of course, it's a pity. And especially when I talk to the students who major in the space science, they find it quite upset that now it's becoming highly sensitive that even after they get the enrollment, the offer from the university, they cannot get the visa from the U.S. government. So I do think this is actually a shame. But I'm sure that China can find some other destinations, both the students and tourists. Right. I would say that the time is still on the side of the Chinese side.
Okay. That's where we are going to have to leave it. Thank you. That's it for this edition of The Heat. I'm Anand Naidu in Washington, D.C. Thanks for being with us.